Very good morning, all our students who have joined online. We have today as a speaker Srinath NG. He's a chartered accountant, cost accountant, and also a visiting faculty in all three institutes. That is the Institute of Post Accountant, Company Secretary, and as well as the Institute of Chartered Accountant. Always, and he is also a consultant to International School for Financial Studies and Avinash Group of Institutes. Welcome to you, Anji, Srinath Anji. And we have with Yogesh Banka. He is past chairman of Rourkela branch and practicing chartered accountant. He will also be speaking on the topic. And, we have especially invited our CA Raj Chawla, Central Council member from Delhi. Welcome to you, Raj Chawla ji. And we have with us Sridhar Mopala, our vice chairman. Friends, this is the practical training modules we are taking care of. And today we have salary, filing of income tax return for salary class. We are not touching other source of income like capital gain, renting of house property. We will have in the next session. Definitely going to cover all this. So today's concentration is only and only salary, and a person who is earning salary, not earning any other income, how he can file his return. So this is a practical training module for our students. And number of series we have designed, and income tax series, GST series, then we will have TDS, we have company law, or any other internal audit, concurrent audit, everything will be in line. Please, I am requesting student, please do not wait for recorded lecture to be posted and you will watch the recorded one. It is always advisable that you attend it in person, so you will get opportunity to ask questions, and definitely whenever we see the original, it is something different when we go for recorded. So over to Sridhar Mopala, our vice chairman, for some words for our students. Over to you, sir. Sridhar.
Yeah. Good morning, Chairman, sir, and my colleague in the council, Raj Chawla ji, and the two speakers of the day today, and most experienced and senior, Srinath and Mr. Yogesh. And a very good evening to all, good morning to all the students present over here. I welcome you all for the 6th live web seminar. It's really being encouraging. When the council has decided to go on the live web seminar, we had a lot of doubts that it's being on the Sunday and a holiday, I know for all of you, what will be the participation. But in the last session, the 5th web seminar was being watched by almost about 10,000 plus students. That shows the wonderful enthusiastic participation from the student and the knowledge what they are gaining. So I request all the students, every Sunday by default 10:30, you will have a seminars. So please share the information among your friends. And coming to this, I would like to say one more thing. All of you might be knowing a lot of discussion going on the new CRET, Committee on Review of Education and Training. And let me share my experience. Across the country, we are conducting the opinion sharing and the feedback from all the stakeholders, from members, students and all. Yesterday in the Hyderabad, we conducted the session with the students. The participation was so big that we could not accommodate the chairs further. And Kapil, mute it, no? Yeah. So the participation was so good that students were so enthusiastic. So I request all the students who are present over here, please visit our website and please give your comments. It will be open for 30 days in total. So kindly come forward and give your opinion, because a small opinion or a suggestion from your side can make a lot of difference. And you being the person who have the most, I mean to say, it is more on an education and training aspect. So the effect on you or the importance will be more on you. Every feedback from your side will be really helpful for us to consolidate, because what we came forward is a draft as of now. So we'll consolidate all the suggestions and then conclude on the finalized part of it. So I request every student to give your feedback and also share among your students. And I really appreciate the Board of Studies team, because even for them, Sunday is a holiday, but the enthusiasm they show in the benefit of the student and the interest of the student to organize a part of it. And I also appreciate both the faculties for taking out your time. And I know that this subject knowledge will immensely benefit all the students. So thank you very much and wish you all the best. Over to Sir Raj Chawla, sir.
Thank you, Sridhar Bhai. Good morning to all students. First of all, I am thankful to the Board of Studies Operation for giving me this opportunity to interact with my young students of this profession. So friends, this is the 6th live webinar on on salary part, ITR 1. So today we will discuss detailed discussion on components of salary and their tax treatment, provision relating to TDS and issue of Form 16, calculation of HRA, and valuation of perquisites. So friends, as you all know that in our income tax, our income is divided into 5 parts. First and the most important is the salary. Second one, income from house property. Third one, capital gain. Fourth, business profession. And fifth, income from other sources. So this is the most important and first part of our income, that is income from salary. So in our ITR 1, we take this basic salary. Everyone know that what is the basic salary, and HRA, conveyance, and all the reimbursement like medical reimbursement and allowances. This is covered in our, this is the components of our salary. And the second point which we are going to cover is the provision relating to TDS and issue of Form 16. We know that the taxable limit of income is 2,50,000. If our employer is giving salary to the employee, it is more than 2,50,000, then he has to deduct the TDS. This is the provision. And after deducting the TDS, after completion of the year, he has to issue a form number 16 to the employee so that he can claim that TDS in his filing of income tax return. And the third topic which we are today covering, it is the HRA, house rent allowance. Because we know that if the employee is staying in a rented house, then the employer is bound to give them HRA. So how we calculate the HRA, our eminent speaker will explain you, all of you. And the last and most important is the valuation of perquisites. We know that our employer gives us various perquisites which are taxable. So how we value those perquisites, like they are providing you car, they are providing you telephone, transportation, or passes, tickets, annual premium on your accident policy, and recreational facilities, leave travel allowance, medical facilities. These all are perquisites which we have to value, that up to which amount it is chargeable to tax, which we include in our income from salary. So this is the subject which we are going to cover. And now I request our Mr. Banka to please take this webinar further.
Friends, before this, Yogesh Banka take over charge. Yogesh ji is there? I think it's disconnected. Yogesh is not here. So let me tell all my participants, you must have understood that Raj Chawla ji is having vast experience of the income tax by his 4-minute speech, that he knows everything in and out about the income tax. He has a long career in the practicing professional, and I have not informed all of you that he is vice chairman of our direct tax committee. So that is a very prestigious position he is handling this year, and wishing him all the best. So now, without waiting for Yogesh Banka to join, I am requesting Srinath Anji to please take over the charge and continue with the session.
Thank you, Chairman sir. Good morning to everyone. I think Chairman sir, Yogesh ji has joined. You were requesting him to take it forward. Should I, or shall he take it forward?
I think he is still connecting.
Yeah,
Yogesh, you comfortable?
Yogesh ji, आप mute में हैं.
Yes, sir. Good morning, sir. Sir, so since all the introductions have been done, it's better you carry on the session and I'll be there. Yes, sir.
Thank you, Yogesh ji.
Thank you, sir.
Yeah. So good morning, one and all. today's session. Very good topics have been enlisted in our seminar, so which will be really useful, because the maximum amount of taxpayers, we can say, are from the salaried areas. So yes, I think this topic would help each and every student to gain utmost knowledge in their salaries areas, and it would also help them to file their income tax returns properly. Right. Having said this, since we had to do a detailed discussion on salaries and with regard to TDS and HRA computation as well as valuation of perquisites, having the time limit also into our mind, let me just take you through quickly through all those provisions so that it will be helpful for every one of you. So first of all, when it comes to salaries, we need to know what is the charging section of the salary. Because without the charging section, no one can actually charge any income to tax under the head salaries or under any other head of income also. So initially, charging section 15 of the Income Tax Act 1961 says there must be an employer and an employee, first of all. So unless and until there is an employer-employee relationship, there cannot be any income which is chargeable to salaries at all. Now, with this regard, I would also like to quote you that such relationship may also be a master-servant relationship also, instead of only saying employer-employee relationship, because there are some areas where instead of salaries, even wages are being paid to the workers. Now, in such cases, this relationship of master and servant will come into picture. Hence, there is no difference between salaries and wages for the purpose of income tax law. Both will be chargeable to tax under the head salaries only. Now, having said this, since I told you about employer and employee relationship, two important points we have to keep in mind here. Now, there are certain directors who receive even remuneration from their company. Now, when a remuneration is being received by the director, all the question is whether such remuneration should be treated as a salary or should it be treated as income from other sources. This is the main doubt which is there in many of the practicing people as well as the students, because when a director comes to you as a client, he will say, I have received salary from a company, because the director does not know whether it is a proper salary or is it a remuneration, etc. So that is the area where we professional students and professionals will be helpful to the directors. Now, when the director comes up with such a kind of question, you always have to see whether such a director is only a director in the company or is he also a managing director. This is very, very important, because only when the director is a managing director, he occupies two roles in that company. One is that of the manager, other one is that of the director. So whenever a director occupies two roles, that is especially a role of manager, he automatically becomes the employee of the company. When he becomes the employee of the company, ultimately the remuneration received by him will be taxed under the head salaries only, not under the head other sources. So this is one very, very crucial factor one has to keep in mind. Instead, if the director was only a director and not a managing director, then the remuneration received by such a director will be taxed under the head income from other sources, not under the head income from salary. So that is the reason why whenever a client comes to you, you have to question him whether is he a managing director or only a director in the company. So for that reason, you have to keep all these provisions in your mind while answering, because we should never give a wrong answer to our client and later on we cannot rectify the same, because a client has total faith on us only. So when a client is coming to us, we need to be very much careful with these kind of issues. The second issue, what I was telling you to keep in mind is, when an MLA or an MP receives any salary, either from the state government or from the central government, because the governments, whichever government is there and whichever MP or MLA is there, they receive salary from the government. Now, when they receive salary, they are using the word called salary instead of using the word called remuneration. Now, when a salary is received by MLA or MP, usually since it is salary, the students and the other people in the society, what they feel is, yes, it is an income from salary, hence it should be chargeable to tax as a salary. But that notion is always wrong. Why that notion is wrong is, neither an MLA nor an MP is an employee of the government. They are only the public representative. When they are the public representative, they can change once in every 5 years. As you know, based on the elections, a person might be an MLA, might not be an MLA, might be an MP, might not be an MP. So it all depends on the public who is going to cast vote to him. Hence, you also have to be cautious that the salary of MLA and MPs will be taxed only under the head other sources, not under the head salaries at all. This point also you have to keep in mind. And the third important point, what you also have to keep in mind is with regard to foregoing of salary and voluntary surrender of salary. Now, there is a difference between foregoing of salary and voluntary surrender. What happens in foregoing? Now, please understand the part to discuss here is which one is taxable, which one is not taxable under the head salary. Now, foregoing of salary means an employee forgoes the salary after he gets the right to receive the same. That means, let us take an example. Salary of the month of June, yes, usually becomes due on 30th of June. Usually 95% of the cases. Now, the employee says to the employer on 30th June that I do not want my salary. Please utilize my salary to some purpose. Like, for example, give it to COVID relief victims. Now, what is the employee doing here? He is no doubt not receiving his salary, which means what? He is foregoing the salary. But when is he foregoing the salary? He is foregoing the salary after he gets the right to receive it, because he is instructing his employer on the last day of the month. So that is nothing but on 30th of June, he is instructing his employer. Hence, what happens? That salary which is foregone by him will be taxable still under the head income from salary only. Whereas, when it comes to the other one, which is your voluntary surrender of salary. In case of voluntary surrender of salary, you have to be careful that the employee voluntarily surrenders his salary on the first day of the month itself. So, say in my example, on 1st June itself, the employee says to the employer, this month, I don't want to receive salary. Instead, use my salary for COVID relief victims. So here, you have to understand the difference between the foregoing and voluntary surrender. Foregoing is done at the end of the month. That is after you get the right to receive the same. Whereas voluntary surrender is being done at the beginning of the month. That is before you get the right to receive the same. Hence, voluntary surrender of salary will not be chargeable to tax. Under any head of income, it will not be chargeable to tax. Whereas foregoing of salary will be chargeable to tax under the head salaries only. Hope I am very clear till here. Then comes your fourth point of discussion. Major point where even law also has got certain obstacles here. What is that point? Is gifts given by employer. Now, when an employer gives a gift to the employee, generally we would have learned all the heads of income. When it comes to income from other sources, we would have learned a specific topic called gifts. Now, there generally what they discuss is gifts received from relatives is exempt up to 50,000 rupees. Gifts received from relatives is exempt up to 50,000 rupees. Now, when an employer gives gift to the employee, many people start treating the employer as not a relative, and what they do is they try to take exemption up to 50,000 rupees. This is actually a loophole in the law. Now, strictly speaking, when employer gives any gift to the employee, let it be in cash, let it be in kind. When employer gives gifts to the employee, it will be exempted only up to 5,000 rupees, not up to 50,000 rupees. So you should know from your employee or nothing but from your client who had given him the gift. Of course, when employer has given him the gift, he will include it already in his salary component. So there is no confusion whatsoever. But there might be some clients who come to you and say that my employer gifted a washing machine to me, hence he did not include it in my salary component, or maybe he has forgotten to include it in my salary component. So now you please treat it under income from other sources. You cannot do that. You have to show it under income from salary only, because it is the who is the person who is giving the gift. Yes, it is the employer. Yes, when employer is giving the gift, it will be exempt up to 5,000 rupees only. These are the basic points generally student has to keep in mind, because the client will come and start confusing you in all these areas. Now, having said this, as I was telling you, we will have further discussion on salaries. Let me tell you, the entire salary topic is divided into 3 parts basically. One is your forms of salary, second one is your allowances, and third one is your perquisites. Very important. Apart from this, one more small part is there, which is called profits in lieu of salary. Now, before we go to these components, let us know under which section the salary term is defined. Salary is defined under section 17 subsection 1 of the Income Tax Act. So 17 subsection 1 says salary includes the following, like basic, dearness allowance or dearness pay, wages, annuity, commission, fees, bonus, arrears of salary, advance of salary, overtime compensation. Now, out of all these things, of course, allowances and perquisites also. Out of all these, you should know one important point before we go to understanding the other parts of salary, that any salary will be taxed on due or receipt basis, whichever is earlier. Every salary will be taxed on due or receipt basis, whichever is earlier, except arrears of salary, advance salary, bonus. All these 3 will be taxed only on receipt basis. Now you might ask, why this special treatment for arrears of salary, advance salary, and bonus? Why should they be taxed on receipt basis only? The reason is, we exactly do not know, that is the employee exactly does not know when is he going to get his arrears of salary, or when is he going to get his advance of salary. Whether he will get or not also, he does not know. Similarly, bonus also. It is not mandatory that an employer has to pay bonus to the employee every year. So please understand, with keeping all these points into our mind, when you receive arrears of salary, advance salary, and bonus, they will be taxed only on receipt basis, not on due or receipt basis, whichever is earlier. Then, with regard to arrears of salary and advance salary, you also can claim relief under section 89 subsection 1 of the Income Tax Act. 89 subsection 1 of the Income Tax Act gives you relief. The reason for giving you relief is the salary does not pertain to this year, rather it pertains to some past years, or it pertains to some future years. Hence, since they are being taxed at the current year rates, they are giving you certain reliefs also. Such relief is given in section 89 subsection 1, which we will be discussing in coming classes, not today, because today's topic is limited only to the discussion on salary. Then, coming to our different components of salary, as I was telling you, we have different forms of salary, different allowances, and different perquisites. Of course, the last one, profits in lieu of salary. When it comes to salary, especially forms of salary. In forms of salary, you are having again 3 categories. Forms of salary which are fully exempted from taxation, forms of salary which are fully taxable, forms of salary which are partly taxable. Now let us see what are the forms of salary which are fully exempted from taxation. Now, if you receive any forms of salary from United Nations Organization, UNO, it is completely exempted from taxation. Similarly, forms of salary received by High Court or Supreme Court judges are also fully exempted from taxation. Similarly, forms of salary received by any foreign enterprise employee in India is also fully exempted from taxation. These are certain forms of salary which are fully exempted. Similarly, you have certain forms of salary which are fully taxable. What are they? Basic pay. Similarly, dearness pay. Please observe, I am using the term called dearness pay. I am not saying dearness allowance because we are not into allowances. We are into forms of salary. Please observe this point also. Whenever you get certain Form 16s, especially of central government or state government employees, you'll get this term called dearness pay. So please be careful. Then third, wages, then annuity, then bonus, then fees, then commission, advance salary, arrears salary, overtime compensation. All these are your forms of salary which are fully chargeable to tax. No other option. Of course, in arrears of salary and advance salary, you will have relief. That relief will be given after computing your gross total income. That's a different issue. First of all, whether it is fully chargeable to tax or not, you have to be careful. Similarly, we have certain forms of salary which are partly chargeable to tax. Now, what are those forms of salary that are partly chargeable to tax? Now, here you are having 5 forms of salary which are partly chargeable to tax. Number 1, you have gratuity, section 10, subsection 10. Second, you have pension, section 10, subsection 10, capital A. Be careful. Third, you have leave salary, section 10, subsection 10, capital AA. Then fourth, you have retrenchment compensation, section 10, subsection 10B. And lastly, fifth one, you have voluntary retirement compensation, section 10, subsection 10C. So these are your certain forms of salary that are partly chargeable to tax. Now, when I say partly chargeable, what do you mean by that? It means that there is a part exemption, not full exemption given to all these 5 forms of salary. So what are they? Once again, I'm repeating: gratuity, pension, leave salary, retrenchment compensation, and voluntary retirement compensation. These are the 5 forms of salary which are partly chargeable to tax, or we can also say they are partly exempted from taxation. When it comes to these components of salary, when it comes to especially gratuity, if that gratuity or the second one, in fact, in the order, it is the third one, please be careful, gratuity or leave salary, these two, please be careful. If these two are received by the employee during his service, that is, when he is still in service, the gratuity or leave salary received by him will be fully chargeable to tax. Please be careful. So you have to always check with your clients, when did they receive the gratuity? Did they receive at the time of retirement or during their service? The gratuity received by him or the leave salary received by them during the service will be fully chargeable to tax. Please keep this point in your mind. Then, what about gratuity received at the time of retirement or at the time of death of an employee? Now, when a gratuity is received at the time of retirement or at the time of death of an employee, if such employee was a government employee, it will be fully exempted from taxation. Whereas if the employee was a non-government employee, it is only partly exempted from taxation. So you have to keep all these points in your mind. When a client comes to you, you have to ask all these points. That's the reason I'm elaborating on all these issues. Please be careful. So when an employee comes to you saying that he has received gratuity, these all questions have to be posed by you, whether it was received during service or at the time of retirement. If it was received during service, you needn't worry, it will be fully taxable. If it was received at the time of retirement, then the second question should come from you is whether he was a government employee or a non-government employee. Because government employee, it is fully exempted from taxation. Whereas if it is non-government employee, it will be partly exempted from taxation. So for that non-government employee also, again, you have to ask your client whether that non-government employee is covered by the Payment of Gratuity Act or not covered by the Payment of Gratuity Act. Now, these all are little typical issues you have to keep in your mind. Whether he is covered by the Payment of Gratuity Act or whether he is not covered by the Payment of Gratuity Act. Don't worry, your clients will give you all this information. Yes. Now, when he is covered by the Payment of Gratuity Act, when you are calculating exemptions, you have to keep the 3 points in your mind. One is actual gratuity. Second one is amount fixed by the government, which is nothing but 20 lakhs in case of gratuity. Third one, 15 days salary into length of service. So when you are taking this 15 days salary, you have to do 15 by 26 into salary last drawn. Because why 15 by 26? Because 4 Sundays are there. So generally working days are only 26. So you have to take 15 by 26 into basic salary plus dearness allowance of the month before you retired. So that's called as salary last drawn. Last drawn means before your retirement, what was your basic and what was your DA. Only these two components you have to take and multiply that with 15 by 26. And this amount you have to multiply with length of service, or I can also call duration of service. Duration means for how long period he has worked in your organization. Now, when it comes to duration of service, you have to keep in mind there might be a practical scenario where an employee might have retired after rendering some fraction of years. Like an employee might have retired after rendering service of 14 years, 3 months and 2 days. Now, how will you consider? Or the employee might have retired after service of 14 years, 6 months and 7 days. How will you consider what is the duration of service? For this, the law has given the clarity. If any fraction is up to 6 months, please ignore the fraction. If any fraction exceeds 6 months, please treat it as one completed year. So in my 2 examples, what I told, 14 years, 3 months and 2 days, there you have to take the duration of service only as 14 years. The other example I told, 14 years, 6 months and 7 days. There you have to make the duration of service as 15 years instead of 14 years. That's the point you have to keep in mind. This is when employee is covered by Payment of Gratuity Act. If employee is not covered by the Payment of Gratuity Act, now what will happen? If the employee is not covered by the Payment of Gratuity Act, again, least of the 3 will be exempted. What are they? First 2 common, actual gratuity. Second one, amount fixed by the government, which is nothing but 20 lakhs. And the third one, there is a change. Here you have to take half month average salary into length of service. Half month average salary. Half means nothing but 1 by 2 into average salary is what I have used the word. Now, what do you mean by average salary? Average salary is nothing but salary of last 10 months divided by 10. That is called your salary of last 10 months, nothing but average salary into length of service. Now, again, same practical problem might come with regard to length of service. What will happen? Again, there might be a fraction. In this case, when employee is not covered by the Payment of Gratuity Act, any length of service you have to, any fractions you have to ignore. Any fractions you have to ignore. Please be careful. Any fraction you have to ignore. So in case he has rendered service for 14 years, 11 months and 29 days also, you have to take the duration of service only as 14 years, not 14 years, 29, not 15 years. Please be careful. So you have to ignore any amount of fraction. This with regard to gratuity. And if you receive gratuity from more than one employer, Now again, if you receive gratuity from more than one employer, please be careful. The maximum amount of exemption should not exceed the amount fixed by the government. So what was the amount fixed by the government? I have told you the amount fixed by the government is 20 lakhs. So the amount of exemption, whatever you are claiming, should not exceed the amount fixed by the government. This is what you have to keep in mind. Then comes your pension. The second part, what I wanted to discuss, section 10, subsection 10A, pension. Please be careful. Pension received from United Nations organization is exempted from tax. Similarly, pension received by the members of family of the armed forces also is exempted from taxation. But if any other family pension is received, that will be chargeable to tax under the head income from other sources, not under the head salary. Now, when I say any other family pension, what do you mean by that? Now, an employee was receiving pension, but suddenly he has died or he has expired. Now, because of this, his wife starts receiving the pension. Now, that is nothing but any other family pension. Now, the pension received by his wife will not be taxed under the head salaries for her. Rather, it will be taxed under income from other sources. The reason being, his wife was not the employee of his boss. So she is a family member, hence that will be chargeable to tax under the head income from other sources, not under the head income from salary. Then coming to taxability of this pension, if it was received by government employee. Now, whether that government employee received a commuted pension or an uncommuted pension, you have to check. Now, what do you mean by commuted and uncommuted pension? Commuted means a lump sum pension. That's called as commuted pension. Whereas uncommuted means a pension which is received on a periodical basis, or we can also say monthly basis. That's called as uncommuted pension. Now, please be careful. Any uncommuted pension received by government employee or a non-government employee will be fully chargeable to tax. Uncommuted pension received by either government employee or a non-government employee will be fully chargeable to tax. Now, this is where you will be getting certain clients also. When you are getting clients, especially senior citizens, especially who are pensioners, either from the central government or from the state government, you have to be careful when you are checking their pension statement. Please see whether they are receiving on a monthly basis or did they receive bulk or nothing but lump sum amount. If they are receiving on a monthly basis, even though they are government employee also, that pension should be chargeable to tax because it is becoming uncommuted pension. Whereas if it is commuted pension, commuted pension will be exempted in the hands of government employee. Commuted pension is exempted in the hands of government employee. Whereas if commuted pension is received by non-government employee, now what will happen? If commuted pension is received by non-government employee, next thing you have to check is whether that employee also received gratuity or not. Yes, what you're listening is correct. Whether that person who is receiving pension has also received gratuity or not, you have to check. If that person, apart from receiving pension, he also received gratuity, then out of the commuted pension, out of the commuted pension, 1/3 of full value will be exempted from taxation. 1/3. But this 1/3 will be exempt only when he is also in receipt of gratuity. In case he is not in receipt of gratuity, then half of full value of pension only will be exempted. Half of full value of pension only will be exempted. So you have to be careful while calculating this one. Then comes your third one, leave salary. I've just now told you, leave salary received while in service is fully chargeable to tax for any people or any employee, government or a non-government. Whereas when leave salary is received at the time of retirement, and if it is received by government employee, it is fully exempted from taxation. Whereas if it is received by non-government employee, it is exempted to the least of the four. Least of the four will be exempted here, not least of the two or least of the three. Please be careful, least of the four. Number one, actual leave salary received. Second, amount fixed by the government. Now, with regard to leave salary, amount fixed by the government is only 3 lakhs. Please be careful. Third, 10 months average salary. 10 months average salary. That means first you should do average salary. How will you do? Just now I was telling you, salary of last 10 months divided by 10. Again, multiply that by 10. Simple. So ultimately, you will get an answer of salary per month. Simple. Because 10 and 10 will get cancelled. Yes. Then last one is, fourth one is leave credit in number of months multiplied by leave credit in number of months you have to find out multiplied by average salary. Now, how to find out this leave credit in number of months? For that, you should know, you should ask your employee, and that is your client only, that how many days of leave he can take during the year. That is leave entitlement during the year. How many days of leave he has taken during his service. Subtract that amount from, subtract that number of days of leave availed from leave entitled and divide the entire one by 30. Why you should divide by 30? Because you should know leave credit in number of months. Why you should know in number of months? Because you are multiplying it with average salary. So you should have equal comparables. Am I right? So that is the reason you have to multiply the leave credit in number of months with average salary. So once you find out the least of the four, the least will be exempted and the balance will be chargeable to tax. Again, if you receive leave salary from more than one employer, same rule what was applicable for gratuity will also be applicable here. The rule is nothing but the maximum amount of exemption cannot exceed the amount fixed by the government. Here the amount fixed by the government is 3 lakhs. Hence, it cannot exceed the amount fixed by the government, which is 3 lakhs. Then comes here, fourth, retrenchment compensation. Section 10, subsection 10B. Now, retrenchment compensation is nothing but a compensation which is paid by the employer to the employee because of some dispute between him and the employee. Now, because of that dispute, the employer has retrenched the employee from the organization, nothing but removed an employee from the organization. So, as per the Industrial Disputes Act, the employer is bound to pay some compensation to the employee. That compensation is nothing but called retrenchment compensation, and the maximum exemption what you can claim from retrenchment compensation is rupees 5 lakhs. Up to 5 lakhs, this retrenchment compensation will be exempted. The balance will be chargeable to tax. Same way, voluntary retirement compensation, section 10, subsection 10C. Many a times you people will get this one. Voluntary retirement, because your client will come and say, I have taken voluntary retirement. So how to calculate the taxability of this? When it comes to voluntary retirement compensation, again, the maximum amount of exemption is 5 lakhs, which is fixed by the government. Maximum VRC or voluntary retirement compensation, which can be claimed as an exemption, is only 5 lakhs. And please keep one point in your mind. The employee cannot receive voluntary retirement compensation from more than one employer. Just as in the case of gratuity or leave salary, here voluntary retirement compensation cannot be claimed from more than one employer. That is the catch here. So these are certain forms of salary which are partly exempted from taxation. Similarly, now the second part in our salary is allowances. Now, again, allowances are divided into 3 categories. One is allowances that are fully exempted from taxation. Second, allowances that are fully taxable. And third, allowances that are partly taxable or partly exempted. Now, let us see what are the allowances that are fully exempted from taxation. First, allowances received from United Nations organization is fully exempted. Similarly, allowances received by High Court or Supreme Court judges, again, fully exempted. Third, compensatory allowance under Article 222 Subrule 2 of the Constitution of India is also fully exempted. And lastly, sumptuary allowance. Sumptuary allowance is the allowance given to parliamentarian officials to take care of the guests who are coming to India, to entertain the guests. It can be any expenses. So such kind of allowances will be provided to those officials called as sumptuary allowance, and that sumptuary allowance also is fully exempted from taxation. Then let us know what are the allowances that are fully taxable. This is where everyone will get in the Form 16. Please be careful. Allowances that are fully taxable. Number one, dearness allowance. Second one, project allowance. Third one, interim allowance. Fourth one, city compensatory allowance. Fifth one, overtime allowance. Sixth one, holiday allowance. Seventh one, servant allowance. Eighth one, tiffin or meal or dinner or refreshment allowance. Ninth one, medical or hospital allowance. 10th one, telephone allowance. 11th one, any other cash allowances like transport allowance. These are the allowances that are fully chargeable to tax. You have to be very cautious with these kind of allowances, because there are some allowances which are partly taxable also. So let us see what are the allowances that are partly chargeable to tax. Now these allowances are divided into three categories again. One is allowances that are exempted based on amount utilized by the employee. They are given in section 10 subsection 14 clause 1 of the Income Tax Act. Section 10 subsection 14 clause 1 of the Income Tax Act says there are 6 allowances which are totally exempted based on amount spent by the employee. They are nothing but travel or transfer allowance. It is not transport. Please be careful, because transport allowance was fully chargeable to tax earlier. I have already told you. Then the second one is conveyance allowance. Third one, daily allowance. Fourth one, helper allowance. Fifth one, research, or you can also call academic research allowance. And last one, uniform allowance. So you can also remember TCDHRU. TCDHRU. These are the 6 allowances which are covered under section 10 subsection 14 clause 1, and they will be exempted based on amount utilized, nothing but amount spent by the employee. So say for example, employer gave a conveyance allowance of 2,000 to an employee, but employee spent only 1,200 out of that. So what is that you have to do? You have to charge balance 800 rupees to tax, because balance 800 is in the pocket of the employee. Employee is enjoying that money. That means it is an additional income to the employee. Hence, you have to charge it to tax in the hands of the employee. Instead, the employer gave 2,000, but the employee spent 2,200. Please understand, this is a very rare case, because no employee would be willing to spend more than what was given by the employer. This is a very rare case. But if that case arises to you, what you have to do? How much exemption you can claim? You can claim full amount of exemption, but subjected to the amount of allowance given to you. That means 2,000 was the allowance given to you, but the employee has spent 2,200. When you give exemption, you should not give 2,200 as an exemption. You had to restrict your exemption to 2,000 rupees and make the balance amount as nil. Yes, so nothing will be chargeable to tax. So next, allowances that are exempted based on amount fixed by the government. Section 10 subsection 14 clause 2 will tell you what are the allowances that are exempted based on amount fixed by the government. In that, basically every employee, almost all every employee will have 2 things basically: children education allowance and children hostel expenditure allowance. Basically, any employee will have these things: children education allowance and children hostel expenditure allowance. Now, when it comes to children education allowance, rupees 100 per month per child for a maximum of 2 children will be exempted. Not more than that. Only 100 per month per child for a maximum of 2 children will be exempted. And please be careful. This is a exemption given from children education allowance, and this has got nothing to do with your section 80C. That is nothing but the tuition fee which you claim as a deduction from the gross total income up to 1,50,000. This has got nothing to do with that. So this is an allowance. That's why I'm saying you, please understand, children education allowance will be exempt up to 100 per month per child for a maximum of 2 children. Similarly, hostel expenditure allowance will be exempted up to 300 per month per child for a maximum of 2 children. Likewise, you are having a list of 14 allowances which are exempted based on amount fixed by the government. So I suggest every one of you, I request every one of you, please go through section 10, subsection 14, clause 2, because in all these allowances, certain allowances are there where minimum and maximum limits are fixed by the government. So minimum you can claim this much, maximum you can claim so much. That is the limit fixed by the government. For that reason only, I am asking you, because it's not possible to explain each and everything. Hence, I'm asking you to just go through section 10, subsection 14, clause 2. Then comes your major area which everyone will have is your HRA. Section 10, subsection 13A and Rule 2BA. Hope my screen is visible to every one of you, and just showing you what is the HRA and how it should be computed. I can tell this to you orally also, but certain areas I want to show you through the slide. Hence, I'm just showing you the slide. So please look into the slide. I'll first explain, then I'll take you through the slide. Yogesh ji, I think my slide is visible to you.
Yes, sir.
Yeah, thank you so much. Thank you so much. Yeah, so in case of HRA, first and the foremost thing, please be careful, which actually this issue has been propping up many times with our employees, especially with all due respects, I'm just saying, especially with software employees. Why, sir? Because those are the employees who want or who have many doubts, because before coming to us for a solution, they do Google and come to us for a solution. So please understand, certain times, certain areas, Google also gives a wrong answer. So please, you should be thorough with the subject before you listen to your client. No problem in listening to your client, but you can see funniest things what your clients will answer. So please be careful. You should be thorough with the subject. First of all, HRA means what? House rent allowance. Now, why is the employer giving the house rent allowance to the employee? Because the employee is staying in a rented house, because of which you or the employee will be eligible to claim exemption under section 10, subsection 13A, and also covered by Rule 2BA of the income tax rules. So now, unless and until, listen carefully, unless and this is the area where your employees and the clients will come and ask you a question. Unless and until the employee incurs expenditure on rent of the house, he will not be eligible to claim exemption under section 10, subsection 13A. Why am I saying this is, many employees comes to us, they ask us, sir, I am staying in my house which is owned by my father, or I am staying in a house which is owned by my wife, and I am paying rent to them, sir. Please tell me, will anyone pay rent to the family members? No. That means what? They just want to claim the exemption, and this is the loophole in the law, because law says only one point: assessee should not own any house at the place of stay. Assessee should not own. So please understand, that is what the client also is coming and saying us, it is not my own house, boss. I am staying in a house where my father is owning it, hence I show it as if I'm paying rent to my father. Strictly speaking, legally, it is not correct. Legally, it is not correct, because the law also says employee should incur expenditure on rent. Now, you can't say, and you can't escape by saying that I'll pay rent to my father. What problem for you? If still you want to claim exemption, let your father disclose the income in his income tax return, so that you will be eligible to claim exemption under section 10, subsection 13A. This is certain procedures we CAs or we tax advisors, we are following with our clients in order to keep our clients also under a safe mode. And when you are calculating this HRA, generally, when a client comes to us, we need not calculate any HRA. Strictly speaking, we need not calculate, because this HRA calculation will be done by the employer and the amount will be already appearing in the form number 16. That is nothing but the TDS certificate. You actually need not calculate the exemption. But as a tax advisor, we should know how is the amount calculated as an exemption. For that, least of the three will be exempted. Let us learn what are the least of the three. If you look into the slide, it's very clear. I have given you actual HRA received and just highlighting it. That is nothing but whatever HRA you received. Second, rent paid in excess of 10% of salary. Rent paid in excess of 10% of salary. So for this purpose, you have to first calculate how much is the salary. For that purpose, salary means what? I have given you salary means basic pay plus dearness allowance plus commission. But if you observe, I have given DA star mark. One star mark I have mentioned. What do you mean by the star mark? It means you have to consider only that much amount of dearness allowance which is forming part of salary for calculating retirement benefit or for the purpose of calculation of HRA. They will tell you in the terms of employment, all these things will be given. You need not worry. Then what is this commission star mark? I have mentioned commission star mark also. Commission star mark means nothing but that only that much commission which is as a percentage of turnover should be considered. Commission only as a percentage of turnover should be considered, not a fixed commission, because there are certain employers who pay fixed commission to the employees. That commission you should not consider. Only that much amount of commission which is as a percentage of turnover should be considered. And the third one you have to keep in mind is either calculate 40% of salary or calculate 50% of salary. So if you observe this, when you have to take 40, when you have to take 50, 50% must be considered when your house is located in Mumbai, Chennai, Delhi, and Kolkata. Only 4 areas. That's why I have given you MCDK. If you can understand, Mumbai, Chennai, Delhi, and Kolkata. If the house where you are staying is located in MCDK, then only you have to calculate 50%. Otherwise, you have to calculate 40%. Sometimes your employee might come and say to you that my office is located in Delhi, but I am staying in Noida because I travel always every day from Noida to Delhi and Delhi to Noida. In such case, you should not consider 50% of salary just because his office is located in Delhi. Here, what should be located? It is the residential house where he is staying. That house should be located in MCDK. Then only you can calculate 50% of salary. Otherwise, you cannot calculate 50%. You have to go by 40% of salary. So these are the least of the three. As I told you, actually need not calculate. They will calculate and give. But you should also be aware of all these things. And there are certain employees coming to us and many other CAs and tax advisors saying that this year I forgot to claim HRA with my employer. This year I forgot to claim HRA. That means I forgot to submit all the rental receipts to my employer. Hence, my employer has fully taxed the HRA, whatever he paid to me. Is he correct in doing so? Answer is yes, he is correct in doing so, because employer will not consider the exemption unless and until the employee gives rental receipts, because the law says exemption is provided only if the assessee incurs expenditure on rent. Now, when it comes to the other area, there is one deduction called Section 80GG. Now, that deduction is given towards the rent paid of the house. Now, many employees are coming to us and they are asking us, why don't you claim the HRA in our income tax return? We cannot claim that HRA unless and until it is mentioned in form number 16, point number 1. Point number 2, can't you claim the deduction under Section 80GG? Answer is no. Please understand, whenever exemption under 10 subsection 13A is applicable, deduction under section 80GG is not applicable. You have to keep these points in your mind. Whenever you are doing the income tax return, whenever you are claiming the deduction, if it was not claimed under 1013A and he is a salaried employee, he cannot claim deduction under 80GG. So the whole idea of bringing 80GG is for those who are non-salaried people and those who stay in rented houses and pay the amount of rent. That is the whole idea of bringing in 80GG, not because you did not claim in 1013A, because of that you can claim in 80GG. You cannot do that. So please be careful with all these points. Then, having said this, we have completed with the category of allowances. Then we will come to something called perquisites. Now, first of all, what do you mean by a perquisite? Yeah, I'm sorry. Perquisites are nothing but a benefit given by the employer to the employee. That is basically called as a perquisite. A benefit given by employer to the employee. Now, this benefit is given by employer to the employee over and above his salary. I mean to say, over and above his forms of salary and over and above his allowances. Now, any benefit, like for example, employer has provided a accommodation to the employee, either free of cost or by charging some amount, concessional rent, we can say. Similarly, the employer might have provided motor car facility to the employee. Employer might have provided club facility to the employee. Employer might have provided some tickets to the employee. Employer might have provided transportation facility to the employee. So always remember, the employer would have also provided medical facility, educational facility, loan to the employee at a concessional rate. All these are treated as perquisites. So please understand how to know what is the amount of perquisite earned by the employee from the employer. For that, you should actually go through the valuation rules given in rule number 3 of the income tax rules. Because rule number 3 in the income tax rules gives you different methods of valuation. For different methods, for the different kinds of perquisites or benefits given by the employer to the employee. Now, in all these things, one common point you have to keep in mind is, what is the benefit received by the employee from the employer? That's it. What is the benefit which is received by the employee from the employer? Once the amount of benefit is known, it is enough. That will be the value of perquisite. Like, I'll tell you a small thing. An employer gave medical facility to the employee. Now, when the employer has given the medical facility, please observe, this is not a medical allowance. This is a medical facility, I'm saying, because medical allowance or hospital allowance is a fully taxable allowance, which we have discussed just now. Medical allowance or a hospital allowance is a fully taxable, that is an allowance. But now what I'm saying is a perquisite, which is nothing but medical facility. So likewise, there are various perquisites which the employer is going to give to the employee. I'll just give you a list of perquisites, and all those perquisites are covered under section 17, subsection 2, clause 1 to clause 8. Clause 1 to clause 8. And please be careful, for the purpose of perquisites, an employee should be categorized into a specified employee and a non-specified employee. An employee who is also a director cum employee will be treated as a specified employee. An employee who holds substantial interest in the organization will be treated as a specified employee. An employee who draws cash salary, please observe, cash salary, it is not non-monetary salary, it should be purely cash salary in excess of 50,000 per annum will also be treated as a specified employee. So these three are treated as any of these three. That is, if an employee is either a director cum employee, or he holds substantial interest, or he draws cash salary above 50,000 per annum, then he will be treated as a specified employee. All other employees will be treated as non-specified employee. Now you might be wondering why you are teaching about specified and non-specified. The reason is, when you are valuing the perquisites, as I told, section 17 subsection 2 clause 8, clause 1 to clause 8 are there. In that, there is one clause 17 subsection 2 clause 3. That perquisite is taxable only if the employee is a specified employee. 17 subsection 2 clause 3 perquisite is taxable only if the employee is a specified employee. All others are taxable whether the employee is a specified employee or a non-specified employee. So same thing, I have put it on my slide also. You can go through the same. For the benefit of all the students, I have also written in line by line all the points what I have discussed. So let me give you certain lists of perquisite also. Now, please understand, different perquisites are there, like rent-free accommodation. 17 subsection 2 clause 1 is discussing about this. Second, 17 subsection 2 clause 2, accommodation provided at a concessional rent. Then 17 subsection 2 clause 3, there are different perquisites. There are around 5 perquisites which are taxed under 17 subsection 2 clause 3, that too only in hands of specified employee. Like few things I'll tell you: value of concessional ticket, motor car, educational facility, domestic servants, gas, electricity and water. These are the 5 perquisites which are covered under section 17 subsection 2 clause 3, which will be taxable in the hands of only a specified employee, not in the hands of non-specified employee. Similarly, 17 subsection 2 clause 4, any benefit of the employer, yes, employee paid by the employer. Similarly, 17 subsection 2 clause 5, if you observe, you had something called insurance premium. There are 2 insurance premiums. One is life insurance premium and medical insurance premium. Please be careful. Medical insurance premium paid by the employer to the employee is not a perquisite. Only the life insurance premium paid by the employer to the employee is a perquisite. Only the life insurance premium. You have to be very, very careful with this, these two. Medical insurance premium paid is only to secure the employee's health. Okay, so that only if employee is healthier enough, he will put some work in the organization which will actually benefit the employer, not the employee. That is why medical insurance premium paid is not a perquisite. Whereas when you take the case of life insurance premium, this life insurance premium paid by the employer on behalf of employee will be treated as a perquisite in the hands of the employee. And 17 subsection 2 clause 6 talks about sweat equity shares, or you can also say ESOPs, employee stock option plans. Now these also will be treated as a perquisite, but while treating them as a perquisite, you have to keep in mind what is the fair market value of those shares on the date of exercise of option. Because when you are doing that, you will be having the fair market value on the date of allotment, fair market value on the date of vesting of the option, fair market value on the date of exercise of option. Always you have to go by fair market value on the date of exercise of option, not on the date of vesting, not on the date of allotment. So please be careful. That fair market value will become the value of perquisite in the hands of the employee. Of course, the employee will pay some amount or some price for the share called as predetermined price. Such a predetermined price, whatever employee pays, it is not a benefit to him, since he is paying nothing but he is incurring expenditure from his pocket. Hence, that should be subtracted from the fair market value, and the balance shall be treated as a perquisite in the hands of the employee. Then comes your 17 subsection 2 clause 7. Now 17 subsection 2 clause, actually there is an amendment here with effect from assessment year 2022-23. Please be careful. 17 subsection 2 clause 7 says any amount of contribution made by employer to the employee's superannuation fund or recognized provident fund above rupees 7,50,000 rupees, that excess amount will be chargeable to tax. So any amount of what, my dear? Contribution made by the employer to the employee's superannuation fund above how much amount I told? 7,50,000. That excess only will be taxable. So let me just take you quickly through an example. Employer has contributed around 9 lakhs to the employee's superannuation fund. So what will be the amount of income taxable as a perquisite in the hands of the employee? The amount of income will be only 1,50,000 rupees, not total 9 lakhs. So that's the catch here in 17 subsection 2 clause 7. You have to be careful that it is only the excess amount which will be chargeable to tax. Similarly, another new section has been introduced in perquisites with effect from assessment year 2022-23. That is nothing but your section 17 subsection 2 clause 7a. Now what 17 subsection 2 clause 7a says is the excess contribution made by the employer to the employee's provident fund or recognized provident fund or whatever superannuation fund, if that excess is deposited and any interest or any dividend is earned on that excess money, such a dividend or interest earned on that excess money will be fully taxable in the hands of the employee. The excess amount, what is that is the interest or dividend whatever you earn on that excess money. Like just now I was telling you an example of 1,50,000 excess amount. That 1.5 is taxable under 17 subsection 2 clause 7. But any interest or dividend earned on that 1,50,000 will be taxed under 17 subsection 2 clause 7a. So for 17 subsection 2 clause 7a, while valuing the perquisite, they have given you one formula here. What is that? Is PC by 2 into R plus PC1 into TP1. So please be careful. They have given a formula. Using that formula only you have to calculate. So they are asking you, in short, nothing is there in this formula. In short, they are just saying what is the amount of excess contribution, what is the interest earned on that excess contribution. Only that much amount should be chargeable to tax. That is what they are saying. So this formula you have to keep in mind, and then you have to calculate the perquisite. And this is the new perquisite which has come into existence with effect from assessment year 2022-23. Then perquisites covered under section 17 subsection 2 clause 8. Different perquisites are there. That is any other perquisite. This is just like a residuary clause, my dear. Any perquisite which is not covered under first 7 categories or first 7 plus 1 category, it will be covered under 17 subsection 2 clause 8. Like for example, telephone facility. Telephone facility is covered under 17 subsection 2 clause 8, but they say very clearly it is not chargeable to tax. Telephone or mobile phone facility provided by the employer to the employee is not chargeable to tax as a perquisite, is what they have told. Are you clear? Then, having said about perquisites, we also have something called profits in lieu of salary. Section 17 subsection 3. Yes, 17 subsection 3 says any amount paid by the employer to the employee apart from the forms of salary, apart from allowances, apart from perquisites will be called as profits in lieu of salary. Nothing but, say for example, an employer paid some compensation at the time of termination of employee. I mean to say at the time when he terminated the employee, at the time of termination, if employer paid any compensation to the employee, then such compensations will be taxed as profits in lieu of salary, not under any other case. So likewise, you are having different forms of salary, with different profits in lieu of salary, which are covered under section 17, subsection 3. You have to be very, very careful while doing all these things. So with this, if you combine all these 4, that is your forms of salary, allowances, perquisites, and profits in lieu of salary, you will get something called as gross salary. The total of these 4 will be called as gross salary. From this gross salary, you will have to take deductions under section 16. Now, these deductions under section 16 are again categorized into 3. 16 subsection 1A, 16 subsection 2, and 16 subsection 3. 16 subsection 1A is talking about standard deduction, which will be either gross salary or 50,000 rupees, whichever is lower. Second, 16 subsection 2 will be entertainment allowance. But please be careful, 16 subsection 2 deduction is available only to government employees, not to non-government employees. And for government employees also, least of the 3 will be allowed as a deduction here. What are they? Number 1, actual entertainment allowance received. Second one, amount fixed by the government, which is rupees 5,000. And third one, 20% of basic salary. These are the 3 least you have to find out. That least will be allowed as a deduction under section 16, subsection 2. Then lastly, 16 subsection 3 talks about professional tax, or some areas it is also called as a tax on employment. So this professional tax or tax on employment will be allowed as a deduction only if it is paid. If it is not paid, it will not be allowed as a deduction. So once you subtract these deductions, the balance, what you call, is your income from salary. Now, why I told this income from salary is, listen carefully. The employer, while he is paying the salary to the employee, he will be deducting TDS under section 192 if the salary exceeds the basic exemption limit. If the salary exceeds the basic exemption limit, the employer will be deducting TDS under section 192 at what rate? At the slab rates that are applicable to that respective individual. That is, if the employee is a normal citizen, then his basic exemption would be 2,50,000. If he is a senior citizen, then his basic exemption will be 3 lakhs. If he is very senior citizen or super senior citizen, his exemption limit will be 5 lakhs. So based on that, the employer will apply those slab rates for the respective individuals, and he will start calculating the TDS, and this TDS will be deducted by him on a monthly basis. So first they will estimate what is your salary, what is your tax, what is the amount of tax, whatever is going to come onto the salary, that tax amount they will divide by 12, nothing but they will do average. That amount every month they will be deducting from your salary income. That is what is your TDS on salary. Now one important catch is there here. An employee, if he has no other income, what he can do is he can make an application to the assessing officer in form number 13. Application to assessing officer is made in form number 13 in order to request the assessing officer to permit the employer to deduct tax at a lower rate or not to deduct any tax at all. So that is provided by, or that is given, or that permission will be given by the assessing officer only if he feels that yes, it is correct in giving so. Otherwise, he will not give that permission for which application was made in form number 13. So there is a possibility for the employee to, what my dear, make an application in form number 13 for either lower rate of deduction or no deduction of TDS at all. So that all depends on assessee to assessee. But you have to be careful. This application in form number 13 will not be possible unless the employee holds a PAN number. Unless the employee holds a PAN number, this form number 13 will not be possible. Yes. Then for that, you have to make an application online only. You can directly make the application and request the assessing officer. Then the employer, since he deducted TDS, the employee will ask him some acknowledgement. No. Now that acknowledgement is nothing but your TDS certificate in form number 16. Please understand, the form number 16 should be provided by the employer on or before June 15th of the next financial year. On or before June 15th of the next financial year. So now for the last financial year 21-22, next 3 more days time is there. That's it. Because today is 12th June. On or before 15th June, the employers, whoever have deducted TDS from the employee, have to issue form number 16 unless and until the time is extended by the government. Now the government, when did it extend? Recently, during the COVID times. Since it was difficult for people to survive, the government has shown sympathy and then they have extended the time limits of issuing the form 16. Unless it extends, generally the employer has to give form number 16 on or before June 15th of the next financial year. Now, apart from issuing form 16, the employer also has to give annexure. Now, what is this annexure? Listen carefully. A form 16, I'll show you everything. A form 16 will have 2 parts basically. Part A and Part B. Part A will tell you what is the amount paid to the employee, what is the amount of TDS deducted from the employee, what was the amount paid to the government. This is the summary of form Part A of form number 16. Part B of form number 16 will give you details of what was the amount of salary paid, what was the exemptions allowed, what was the gross salary, what was his total income, what was the income under the head house property declared by the employee, what was the income from other sources declared by the employee. These all will be there in your Part B of form number 16. That is why if an employee is having even income from house property, one house property now, or the employee also has income from other sources, he has to give this information to the employer so that the employer will include the same while calculating the tax and he will issue the form 16 accordingly. Now, please be careful. As I told, the employer also has to give annexure. That annexure is nothing but in form number 12BA. Form number 12BA. This annexure is purely for the amount of perquisites paid by the employer to the employee. Just now we learned all those perquisites, 17 subsection 2 clause 1 to clause 8. If employer has given any perquisites, he has to give an annexure in form number 12BA to the employee. And this 12BA also has to be given on or before June 15th of the next financial year. So those all points I have already mentioned. Now, I was also telling you in the basic point, or when I started the class, I was also telling you that an employee might receive arrears of salary and advance salary also. Now, when he is receiving arrears of salary, advance salary, I was also telling you he will be entitled to relief under section 1889 subsection 1. Now, in order to claim that relief, what the employee has to do, or what the employer has to do, employer must provide form number 10E. Sorry, employee must provide form number 10E to the employer so that the employer will consider the relief under section 89. Otherwise, relief will not be provided. It's very clearly mentioned in the income tax law. If you want to claim relief under section 89, first go and submit form 10E. Then only relief will be provided to the employee. And this part of relief has been newly inserted in ITR number 1, especially in salaries itself. Are you claiming relief? They have inserted this, so you have to be careful. Yes, and as I was telling, if employee worked with more than one employer, now till now we were discussing only with one employer. If employee worked with more than one employer, like for example, Mr. A worked in X Limited as well as in Y Limited. Now what happens? Mr. A has to disclose the particulars of income earned in X Limited to Y Limited, or Mr. A has to disclose the particulars of income earned in Y Limited with X Limited. So he has to give the details of incomes earned from other employers to one of the employer of his choice. Based on that, that employer will deduct the TDS considering all the incomes, because salary received from more than one employer also is taxed under that salary only. So salary received from, since it is from more than one employer, is taxed. In order, at the time of generating TDS, you have to provide that information to the employer so that the employer will consider all that income, and then he will start deducting TDS and generate form number 16 to the employee. And such a form number 16, as I was telling you, TDS certificates I have shown you. Form number 16 is applicable for TDS on salary, form number 12BA for statement of perquisites, and both this form number 16 and 12BA has to be issued within 15th June of the financial year. A sample of form number 16, as I was telling you, form 16 is containing two parts, part A as well as part B. A sample of form number 16, and just displaying it for your knowledge purpose. Of course, many of you might have seen, I have highlighted few points. Of course, I have hidden few points because it relates to my client, which I don't want to disclose the same. So if you observe this form number 16, before I go to discussion on this point, many of my clients, and in fact other clients with other people, other tax practitioners or the experts also, would have come up with a query asking them to issue form 16. Sir, please issue form 16. Because they might have gone to the bank for a loan. Now the bankers would have asked them to bring form 16. Now these poor employees, they do not know who issues, what is form 16. Then they will ask the bank, they would have asked the banker also, please, what is form 16? The bankers would have simply told, you go and ask your chartered accountant or your tax consultant, they will tell you. Now what these poor employees will do? They think that we only have to issue form 16. Because yesterday only I got a call. Sir, please give me my form 16, sir. How many days you will hold, sir? That too, I want part A, sir. Arey Baba, I told, form 16 cannot be issued in a manual mode now. Earlier, before introduction of Traces website and all, Traces means TDS reconciliation and correction enabling system. That is a full form of Traces. Earlier, before introduction of Traces, yes, we used to give form 16 manually. We means the employers, not chartered accountants. Once again, please be careful. It is the employers who used to issue the form 16 manually. Earlier, it used to happen. Now the bankers, certain bankers, have not come out from that situation. Or even though they know, they want to, they do not want to waste the time with their client. So they just go and say, they tell the client, you go and ask your CA. So what happens? The poor employees also will come and ask, sir, please issue form 16, sir. Then we are supposed to explain them that form 16 cannot be generated in a manual mode. It has to be generated only through Traces website. But how will you generate form 16 through Traces website? Is not like our Google, you go to some website, click, download. It's not like that. For that, first TDS has to be deducted. Only when your employer deducts TDS, he will file TDS returns. Only when he files TDS returns, this TDS form number 16 will be generated. Otherwise, form 16 cannot be generated like that. Just like that, no one will give you form 16. So you have to be cautious with your clients also. Whenever they are asking you, please tell them form 16s cannot be generated manually. They can be generated only through online. That is what I wanted to just give you an information so that it will be useful to every one of you. Now, if you see here, form number 16, part A, I have just given a sample. If you see, TDS reconciliation and correction enabling system is there very clearly. Form number 16, as per rule number 31, sub rule 1, clause A, part A, if you observe, certificate issued under 203 of the Income Tax Act for tax deducted on salary. On the left hand side, you will have certificate number. On the right hand side, last updated. On the left hand side, you will have name of the employer and the name and address of the employee. Just for your knowledge purpose, I have just given some name. Then PAN of the deductor. Then before that, TAN of the deductor. TAN, because you know very well, every person who is deducting TDS must have some number called TAN number. And many a times the client, whenever we are asking him to provide TAN number, he will by default give PAN number only. Because over phone, when we are saying give your TAN number, T appears to be P. PAN is what they say, and they give the PAN number. Now we also should not be foolish enough in taking whatever the clients gives. You should know the difference between PAN number and a TAN number, because both are 10 digits only. Please observe, PAN number and a TAN number both are 10 digits, but only one thing you can differentiate is PAN number first 5 will be alphabets, whereas TAN number only first 4 will be alphabets. That way also you can check, because why we should have this clarity is, in PAN number, no doubt first 5 are alphabets, there is no problem, next 4 are numericals. But in TAN number only first 4 are alphabets. The fifth one, it is a numerical only, but that numerical will be 0. Your client will tell it as O. Definitely your client will tell it as O, because he does not have knowledge. Please understand, at least we should have a knowledge of that. And moreover, whether that number is a PAN number or TAN number, by looking at the 4th letter, we can easily identify, because every 4th letter in the PAN number or the TAN number, every 4th letter in the PAN number will tell you what type of assessee you are. Correct or not? So if you are an individual, it will say P. If you are a firm, it will say F. If you are a company, it will say C. So please be careful with all these kind of things. So your client, whatever he gives, please don't take it blindly. First you evaluate whether it is a PAN number or a TAN number. Based on that only, we have to be cautious enough, because we can be very confident while giving the answer to the clients. That's what I'm trying to say here. Then next, what you will have is your PAN of the employee, and then you will also have assessment year. If you see number 6, I have mentioned here assessment year. And generally for us, present assessment year will be 2022-23. That's the same thing I have mentioned. On the 7th one, you will have period with the employer. Period. That is for how much duration he was with the employer in the financial year. So generally it will be 1/4/2021 to 31st March 2023. But these dates will change. These dates will change when you shifted your employment from one employer to another employer. That is why I was saying you have to give information of income earned from one employer to another employer, because these all will matter a lot. Then see here, you can observe summary of amount paid or credited and tax deducted at source thereon in respect of the employee. Different quarters, he'll give you a summary mark. So how much the employer paid, deducted, how much he paid. So please observe the second column, the third column here. Amount paid or credited is there. Fourth column, you are having amount of tax deducted. Fifth column is very important. How much is the amount of tax deposited? Because unless and until the employer deposits this tax, whatever he deducted, he can't issue a Form 16. And moreover, once if he has to issue Form 16, he has to file the TDS returns. Only when he files the TDS returns, that much amount of tax what was deducted will appear in Form number 26 AS of the employee. Form number 26 AS of the employee. So the employee can keep on checking whether his employer is deducting and depositing the tax or not. So you can always have a right to go and question the employer. Why didn't you deposit the tax, whatever you have deducted from me? Because that is a government's money. The employer cannot keep it with him. So he has to deposit the same, and then only he can file the return. Then only you will be able to see the same amount of credit in your form number 26 AS. Only then you can claim that much amount of credit while you file your income tax return. So many employees also are being deceived by the employers. So you have to educate the employees also. So this is about your part A of form number 16. Now look at part B of form number 16. It is having 3 parts, my dear. 3 parts means 3 pages are there. So I have just given page by page for your easy understanding purpose. Part B, form number 16. As I told, it will contain all the details of salary paid to you, what are the allowances which were allowed as a exemption, what was the deductions claimed by the employee. All these things will be given in Form 16 Part B. So on the left hand side, you are having your certificate number. On the right hand side, you are again having last updated date. Then on the left hand side, name of the employer and all I have given. On the right hand side, the name of the employee. Of course, PAN, TAN and PAN of the employee I have just hidden because it is one of my clients, so I could not. Then he has given also which is CIT, Commissioner of Income Tax, TDS circle. Yes, which CIT to this assessee belongs. That is the deductor belongs. That's what is mentioned here. On the right hand side again, assessment year is there. If you see assessment year 22-23, then period with which the employer 1/4/2021 to 31st March. And if you observe here in form number 16, one new point has been inserted from assessment year 21-22 itself. Last assessment year, whether opting for taxation under section 115 BAC. 115 BAC is an alternative taxation structure which is given by the central government itself, that is CBDT itself. They have told you very clearly an employee can opt for alternative taxation structure or he can also remain in old taxation structure. Now, at the time of deducting TDS, the employer will ask you which scheme you want to be. That is the new one, I mean to say alternate one or the old one itself. If you say new one, here, whether opting for taxation under 115 BAC, here instead of no, it will be yes. If you say old one, it will obviously show no. So this client, whomever Form 16 I'm showing, he has not opted for new alternative taxation structure. Hence, what will happen? What has happened? Here they have given you no. And there is always a question among the clients. Sir, I have given to my employer as new regime. Can I change it to old one at the time of filing the return? Answer is very much yes. If you do not have income from business or profession, you can always change this option on a yearly basis. And when you have given to your employer that you are selecting new regime, but at the time of filing income tax return, your chartered accountant calculated that the tax in old regime is less, you can always shift it to old regime. There is no problem. While filing the income tax return also, you can change the option. There is no problem at all. But if you are a business employee, you cannot. Once the option is selected, it cannot be changed unless and until you cease to carry on your business. So you have to be careful with your clients also, because a client having salary income might also have part-time business income. Who knows? So you have to be careful in these areas also. Then you are having gross salary here. That is salary as per the section 17 subsection 1. Salary as per 17 subsection 2, nothing but your perquisites. 17 subsection 3, nothing but your profits in lieu of salary. If you do the total, you will get so and so. Reported total amount of salary received from other employers. Please observe this one. This point where I'm moving my cursor. Yogesh ji, my cursor, when I'm moving, it is it visible, sir?
It's visible, sir.
Yeah. So I request every student to focus on this one. When I'm moving my cursor, please be careful. Reported total amount of salary received from other employers. This is the point I was telling. When you receive salary from more than one employer, you have to give the details of income earned with other employers so that they will consider the same for calculation of TDS. Then you are having less allowances to the extent they are exempt under section 10. Different allowances are there. Travel or conveyance, travel concession or assistance, nothing but LTA. This 10 subsection 5 is talking about leave travel assistance. Please be careful. Death cum retirement gratuity. Just now I was discussing about this. Commuted pension 10(10)A I was discussing. Leave salary 10 subsection 10AA I was discussing. 10 subsection 13A house rent allowance also we were discussing just now. This is the reason why in detail I have discussed all those provisions. Then coming to the next one, amount of any other exemption under section 10. Now, what could be any other exemption under 10? Let me tell you. Say, for example, a parent is or your assessee is having minor's income. Now, if you club the minus income, you know very well, the parent in whose hands the minus income is clubbed is entitled to an exemption under section 10, subsection 32 of maximum rupees 1,500 per child. Correct or not? So you can claim that much amount of exemption, and that amount can be shown here by the employer. Yes, because employee will give details to the employer and employer will show the details in this area. Then you are having total and all. This will come by default. Total amount of salary received from current employer also you will have. Let's see there. Deductions under section 16. I did not hide these amounts because these have got nothing to do here. Standard deduction under 16 subsection 1A 50,000. Entertainment allowance. Now this client was a non-government employee. I'll just go back to the previous one. Please see. Hexaware Technologies Limited. This is the reason I did not hide the name of the company also. Hexaware Technology Limited is not a government company. Hence, here, entertainment allowance is not allowed as a deduction. I was just not discussing. Entertainment allowance can be deductible only if you are a government employee. Yes. Then comes your next one, professional tax, 2,400 maximum only you can claim. So total he has claimed here. What is the income chargeable under the head salaries? Any other income reported by employee as per section 192 subsection 2B. Now, what is this 192 subsection 2B? Now, this is talking about the income from house property. Please see, if employee had any income from house property, including a loss, that loss also. How will you have a loss? When you don't have any income, but you are paying interest on loan, that is interest on housing loan. So when you compute income from house property, what will happen? You will have a negative amount. That negative amount is nothing but called loss from house. That loss up to a maximum of 2 lakh rupees. You know very well that can be claimed as a deduction, but that information must be provided by the employee to the employer. Then only the employer can include the same here. Similarly, income from other sources. Now, please be careful. When you are having income from other sources like interest on fixed deposit and all, also the employee must inform the employer about the same. Yes, so that he will include it here and he will calculate the tax. Now, when it is income from other source, please be careful. If you had casual income, that cannot be considered here. That has to be considered while filing the income tax return. That too, ITR 2 will be applicable, not ITR number 1. Because ITR number 1 covers only income from other sources other than casual income. So ITR 2 only you have to file, not ITR number 1. Yes, because the time has come. I'm just telling you those differences now. Because I don't want to cover ITR 2. I want to cover only ITR 1. That too only salaries part. Then from here you are having deductions under chapter 6A. Various sections of deductions you are having. Continuation of that. You are having other deductions and all also. Deduction under 80D, deduction under 80E, donations, 80TTA. This is the other important aspect you have to keep in mind because they are employees. Many a times, they are not providing saving bank interest. They are not providing. And moreover, from last year, the income tax department has started sending notices to the employees. Because they have all information from the banks, because banks are sharing the information as per the MOU between the income tax department and the banks. The employees who are having interest about 10,000 in their savings account, they have to disclose the same to the employer or at least to us while filing the income tax return, because that is the income which is chargeable to tax about 10,000. If it is up to 10,000, you show it under income from other source and claim it as a deduction under 80TTA. Because under 80TTA, maximum 10,000 rupees can be claimed as a deduction. So please claim that much amount as a deduction and please ask your employees, ask your clients. The clients will not say, ask your clients to give their bank statement. Yes, because that is becoming a chargeable income, and nowadays notices are coming and the employees have to suffer. In my case, in one of my clients whom I am showing here, he had a bank interest of around 1,53,000. The clients whose information I am showing here, he had for the assessment year 21-22, he had a saving bank interest of 1,53,000. I didn't know that he had so much. I didn't ask him. He didn't tell me. But what happened? Ultimately, he received a love letter from the income tax department saying that, my dear, you have received so much, please come and pay the tax. Then immediately he got panicked. The client got panicked and he asked me, what is this notice I got in spite of filing the income tax return? Obviously, clients will become furious, but we have to educate them. We have to tell them any savings interest above 10,000 rupees, you have to disclose. And for the benefit of all the sections of the people, now income tax department is also reflecting that much amount of saving banks in your AIS statements, annual information statement. So you, before filing the income tax return, please be careful. You also have to compare the annual information statement, which will show you what is the amount of saving bank interest, what is the amount of fixed deposit interest also. So you can now tell to your client, hello boss, you have so much of saving bank interest. So you can also tell to your client that all the information is now visible. Please disclose everything. You can just show this as a printout, or you can just send him through WhatsApp also by downloading it from the income tax website, so that he will be aware, okay, department is tracking all those things and we have to disclose all the incomes. So please be careful with this 80 TTA also. Then the total of deductions, from that you will subtract that, you will get tax on total income. Then you will have to calculate rebate also. A rebate under 87A, you know very well, it is applicable only if the total income does not exceed 5 lakh rupees. Now, one of my client asked me a doubt. Sir, my salary income is 4,50,000, sir. I have an agricultural income of 1 lakh, sir. Now, can I claim rebate under section 87A, sir? This is the question asked by my one of my client. I have income of 4.5 lakhs. Okay. My agricultural income is 1 lakh. So my total became 5,50,000. Can I claim rebate under 87A? Now, the answer to this question is very much yes. How, sir? How can you claim? Yes, because agricultural income should not form part of your gross total income. It should be taken only for the purpose of computation of your tax, not your total income. That is the reason why. That is the reason why you have to check only the income excluding agriculture income. So if the income excluding your agriculture income does not exceed 5 lakhs, then yes, you will be eligible to claim rebate under section 87A, apart from claiming rebate for agricultural income. So this is one of the important areas one has to keep in mind. And then obviously from here, the tax payable and all will come. Then relief under section 89, I was telling you, attached details. Attached details means that form number 10E and all you have to attach. Then only the relief will come. Then the balance will be net tax payable. And this entire form number 16, part A as well as part B, will be digitally signed by the person who is responsible to deduct TDS. So it says, I so-and-so, son or daughter of so-and-so, working in the capacity of AGM finance designation, hereby certified that the information given above is true and complete and correct, and is based on the books of accounts and documents, TDS statements and other available records. And date, place, and the signature, and along with that, verification also is there. That is, who his digital signature and all will be inserted. Along with that, the signature, form 16 can be generated. Of course, here, even though you don't put your digital signature also, you can select the option while filing the TDS return, I don't want to sign it digitally. You can take a printout, sign it manually, put your office logo, and you can give it to him. There is no problem at all. You can do the same. Yes. So I think I have completed with all the aspects what were given to me in our salaries topic. Yogesh ji, do you feel I have left any area? You can please let me know.
Sir, you have taken us through a journey which was very subtle, very learning, and many points which I was not aware of, I have got to learn from you, sir. Thank you, sir. It's an amazing journey, sir. So we have received few questions. Shall we start with the questions, sir?
Yes, sir. Just give me a moment. We'll start.
Yes, sir. Please.
Yes, sir. Can I stop the screen share, sir?
Yes, sir.
so that you can share the questions if required on the screen.
So I've got the questions on a different screen. I'm not using it in the same system.
Okay. Okay.
Okay. So one of the question is, the first question which we have from Shreya Vishwakarma. What
Okay.
is the difference between salary and remuneration?
Okay. Nice question. Actually, I've covered this point, salary and remuneration, which I was telling along with directors. Now, here you have one more aspect, as she asked, remuneration received by partners also. Now, generally, some areas we also call that as salary received by partner. Remuneration, salary, all one and the same. But you always have to check who is the person who is receiving that amount. Is there a employer-employee relationship between the payer and the recipient? If so, the income will be taxed under salary. Now, in case, as I told, partner's remuneration. Partner receives remuneration from the firm as per section 40B of the Income Tax Act as per the limits. Now, for that reason, partner is not an employee of the firm. He is the owner of the firm. When he is owner of the firm, that salary or the remuneration received by him will be taxed under income from business or profession, not even under income from other sources. But when it comes to director's remuneration, which I was discussing in the beginning, director's remuneration, director is not an employee of the concern. So if he is only a director, that remuneration will be taxed under income from other sources, not under business or profession. You might ask why it is not under business or profession, because director is not the owner of the company. You know very well, company is a separate legal entity registered. So no director is the owner of the company. That is the reason why if director is a managing director, then yes, that remuneration will be taxed under salary. So maybe her question might be with regard to this, sir, because how to differentiate between a salary and a remuneration. That's the reason I gave this clarity.
Thank you, sir. Thank you. The next question is, you have also covered it, but I'll since Mansha from Delhi has posted it, I'll say the question. Is there a difference between a DNS pay and DNS allowance?
Yeah, strictly speaking, it is there. That's what I have covered also. DNS pay is a form of salary. Because I covered salary into three categories. One is forms of salary, other one is allowances, third one is perquisites. Now, in forms of salary, you will have DNS pay, whereas DNS allowance is covered under allowance. Strictly speaking, tax treatment is same for both because both are fully chargeable to tax. So that is what you have to keep in mind. Both are fully chargeable to tax.
True, sir.
So there is no difference with regard to taxation aspect, but the nomenclature is different.
So the other question from her is whether gratuity is received from earlier previous year from a former employer and again received from another employer in a later year. Limit of 20 lakhs will be reduced by the amount of gratuity exempt earlier.
Yes.
Right.
That is what I was telling. The maximum amount of gratuity which is exempt cannot exceed the amount fixed by the government. So as she asked, I'll just put it in the form of an example so that others also can understand this. Say for example, Mr. A was working with XYZ Private Limited and he received gratuity in the year say 2015. And in that year, he has claimed say for example, he received gratuity of 3 lakhs and in that year, he claimed a gratuity exemption of 1 lakh. Now, in 2021-22, he got again gratuity from another employer, ABC Private Limited. Now, in the gratuity, what he received from ABC Private Limited, while you are calculating the exemption, the second one is nothing but I was telling you amount fixed by the government, which is 20 lakhs. From this 20 lakhs, the exemption of 1 lakh, what you claimed earlier from your employer in 2015 should be reduced and then only it should be compared with the other two items. Otherwise, what will happen if you are comparing 20 lakhs here and 1 lakh there? That means you are claiming more exemption of 21 lakhs, which is not correct.
Very true, sir. So for section 1010B, what item needs to be covered, considered as average pay?
Yeah, average pay is nothing but your basic plus DA. Whatever DNS allowance is there, that DNS allowance you have to consider. That's your average.
Okay. Sir, we have this question from Ashish, who is from Mumbai. Is employees of Indian Railway are covered under government employee category for the purpose of calculation of leave encashment taxability?
For purpose of what?
Employees of Indian Railways are considered as government employee.
Yes, central government employees.
Okay. Then we have Lalit from Mumbai. Probably he is asking 14 year and 6 months, the one which you said about.
Yes, yes.
Less than 6 months will be considered as the lower figure, and more. So 14 years, 6 months, it has to be considered as 15
years. Yes. Only below 6 months, it should be ignored. 6 and above months, it should be treated as 1 complete year.
Another question is from Shakshi, who is from Shikohabad. Gift received from employer exceeds rupees 5,000. What will be the amount taxable?
Only the excess should be taxable.
Only the excess.
Because there are some people who say full amount is taxable, but again that is a loophole in the law, because law is not clear on this aspect whether the amount of 5,000 is exempt and the balance is taxable or total amount is taxable. Law is not clear here, so there's always a confusion here, sir. So even if generally what we will do, we will never charge a full amount to tax. We will definitely reduce that 5,000 balance, only we will charge it to tax, because the more is your income, the more will be the tax liability. So that is what we have to do, sir.
Right, sir. Right, sir. So Amrita from Delhi, she is saying a client is receiving contractual based payments on a monthly basis as salary. Should we treat it as salary or should we show it as other income?
No, it is salary only.
It's a salary.
If they are deducting TDS under 192, then it should be salary. If they are deducting TDS under 194J, and like treating you as a professional, then it should be under income from business or profession. Otherwise, it should be under salary.
Okay. The next one is from Ritesh, who is from Ghaziabad. Employees left job without intimation.
Okay.
Before 1 month, as per the employee has to give a 1 month
notice period.
Then I'll read the question. If employee left job without intimation before 1 month, as per contract, then employer deducts salary that month as per full settlement. But so I think we should skip this question.
Some clarity is missing, maybe.
Okay. So the another question is from Ankur, who is from Mumbai. In case of a retired officer receives performance award, in which section TDS will be deducted and at what percentage?
Is he receiving it from his employer? If so, it will be deducted under 192.
192.
Yeah.
So if the SSC also can see which TDS form will be applicable, 16. So another question from Mansa of Delhi. If an SSC opts for 115 BAC, which TDS form will be applicable? Will it be form 16A or 16B?
But sir, sir, the TDS form will not change because you have opted for 115 BAC or you are in the old regime. Form, once the employer is deducting TDS, form is form 16 only, 16 no other option.
Right. So a shift from Bangalore, he is asking whether I can get the credit of TDS in case where I have not provided PAN at the time of deduction, but
at the time,
at the time PAN subsequently.
No, did he, sir? Last line, can you please read?
I'll read the entire question once again. Whether I can get the credit of TDS in case where I have not provided PAN at the time of deduction, but provided PAN subsequently. For example, in the case of bank interest.
Okay.
So will he be able to?
It's like this, sir. No. I'll try to correlate. Maybe I'll try to understand his, thinking. What is he trying to tell is maybe I did not give my PAN to my employer when my employer deducted TDS. Yes, but I don't know. Ashish, sir. His name is Ashish?
His name is Shiv.
Shiv. Yeah, Mr. Shiv. So please understand on what basis your employer will deduct TDS. Point number 1. Point number 2, if you don't provide your PAN number, the employer will start deducting TDS at the rate of 20%. Point number 2. Point number 3, how will your employer file the TDS returns? If you don't give your PAN number in the TDS return, you have to mandatorily, the employer has to mandatorily quote your PAN number. Otherwise, the TDS credit will not be available to you. So you can't do it just like you are doing for bank interest. So because bank interest employer-employee relationship is not there, and the bankers will file TDS at the end of the financial year. But in case of your employer, every quarter he will file. So that is not possible. So you have to provide at the time of deduction, otherwise credit will not be available. Because that credit, as I was telling, when will you able to claim the credit? Only when that amount is appearing in your form number 26 AS. So to appear in form number 26 AS, first TDS return has to be filed by your employer. While filing TDS return, your PAN number he has to quote. Then only that amount will come and get reflected. No.
So basically, it means for whosoever it is, wherever the TDS is getting deducted, the SSE has to get his PAN number updated with the deductors.
Yes.
And only then, once it is appearing in Form 26 years, the SSE will be able to claim the credit of TDS, right?
Yes, sir. 100%.
Yes, sir. So next question is from Saurabh, who is from Pune. If salary accrues in USA, but it is received in Indian bank account, will it be taxable in India?
But for that, you have to check the residential status.
Yes.
Now, because the taxation, tax incidents and all, Section 5 and Section 6 of the Income Tax Act talks about residential status and tax incidents. So if the employee whom you are referring, if he is a resident in India means what? Obviously, he has to satisfy two basic conditions. First of all, basic condition A and basic condition B. Basic condition A is he has to stay in India for at least 182 days during the previous year. Otherwise, basic condition B, in the previous year, he has to stay for 60 days. And for last 4 preceding previous years, he should have stayed for 365 days. Apart from that, not only that, once he satisfies any of the basic condition, he also has to satisfy additional condition number 1 and 2. Additional condition 1 says he has to be a resident in any 2 out of the 10 preceding previous years. And additional condition number 2 says he has to stay in India for at least 730 days during the 7 preceding previous years. So only if he satisfies these both additional conditions, he will be treated as ROR, resident and ordinary resident. Otherwise, he will be treated as a resident but not ordinary resident. So to know whether his salary income received in USA account, USA salary is received in Indian account is taxable or not, you have to first check his residential status. Based on that only we can say, not based on the amount getting credited in the bank account. So please be careful. First, find out from your client what is his residential status, whether he has been staying in India or not. Based on that only, you can go and give further clarification to the client.
Thank you, sir. The next question is from Saurav, sir. What are the consequences of not issuing Form 16 to employees in time?
Employees in time, if you do not issue Form number 16, you have to face penalty. 200 per day of the default if you do not issue the Form 16 or 5, because not issuing Form 16 is because not filing TDS return. Simple logic. Because once you file TDS return, what problem for you in issuing Form 16? Yes. So please understand, you have to issue Form number 16 within the time. Otherwise, per day, first of all, TDS returns for failure to file TDS return per day, 200 rupees per day of default will be levied on you. So specifically speaking, maybe he is asking if the Form 16 is not given to employees by the employer. Is there any penalty? There is no such penalty. The employer has to just request to the employees. That's it.
Okay. So next question is from Shiv, who is from Bangalore. Can we submit Form 10E now? That is at the time of filing of the return and claim rebate under Section 89.
You cannot claim, sir, because relief under Section 89 has to be inserted in Form number 16 directly. So Form number 16, just now I was showing you the last part in the Form number 16, the third page, it shows relief under Section 89. For that, first employee has to submit Form number 10E and he has to give that information to the employer. I was showing you in TDS 192 slide, which I was showing.
Yes,
I showed you very clearly the employee must submit form number 10A, show it to his employer, then only he will include it in at the time of filing the TDS returns, sir. In TDS returns also there is one column specifically, are you claiming relief under section 89? If so, you have to provide that amount, because calculation is required, sir. Relief is not just like that giving relief. Yeah, there is a particular formula for that. So using that, the employer will calculate the relief and include it in the form number 16. Then only that relief is possible. Otherwise, no.
Sir, I'm just out of my professional experience, I want to ask you one thing. When we are filing income tax returns, particularly if you say ITR 1, there is an option also available on the income tax website to file form 89 to claim relief. I have an experience where we have filed the form 10E, but we have not got the relief till yet. So, why the department is giving an option, sir?
Yeah, maybe the department is giving an option for those who are filing other ITR forms and having business income. Maybe in the past they were working with someone for as a salaried employee, and that someone with whom the past employer with whom they were working, yes, might have paid arrears now because these people would have fought a case.
Okay.
So presently for him ITR 1 is not applicable, no sir. ITR 3 or ITR 4 only will be applicable. Maybe that is the reason why the department is giving you separate annexure, because it will become a problem for these people, no, who are receiving arrears of salary from the past employer. Now they are not employed, so form 16 is not possible for them.
So last year only I had an opportunity regarding this form 89. This is a government organization, a forest development corporation, who have given arrears of salaries to their employees. So basically it should have been the liability of the employer to collect information with respect to relief under 89, which they did not do. And they issued form 16. So ultimately, now as per this webinar, the ultimate loser is the employee who was not aware of giving the information. So what should he do, sir?
No, the employee, see, did he receive arrears of salary or not?
Yes, sir.
Yeah, now he has received the arrears of salary.
Yes,
but
sir.
What is he doing right now? Is he retired, or is he working under some other organization, or is he doing a business?
Working with the same organization, sir.
With the same organization.
Yes,
then
the
person who is paying the arrears of salary would have also deducted TDS also, no sir? Then
yes, sir.
When he is deducting TDS, then he will include it in the TDS returns also, no?
Yes, sir.
When it is included in TDS return, automatically it will come in form number 16, no sir?
So, but relief has not been provided.
That's what they have to provide. That is a mistake of the employer actually.
Employer.
Now, in such case, maybe the employee can go for the separate form which you were telling, no?
Okay.
That he can now file and claim it.
Right,
but generally, the department might not allow, sir. Might not allow, because they are holding the refunds back in these kind of cases. Actually, strictly speaking, they have to follow the law, but the software is designed in such a way, and some instructions I think are given to the subordinates, that if it is not there, don't allow. Simple.
Don't allow. Right.
Because these all are exceptional cases. Maybe one by one case they might do it. And moreover, after this new software has come, you won't believe, sir. You also might have faced many cases where refunds are on hold. First of all, returns itself are not processed.
So it's falling into deaf ears.
Exactly.
So the next question is from Saurabh, who is from Pune. What do we do if the employer refuses to issue Form 16?
He can't refuse, sir. That's what I was saying. Once he has deducted TDS, he has to deposit the same. Otherwise, raise a complaint with the income tax department. Simple logic.
Okay, Saurav again has one more question, sir. If an assessee is earning a salary income and TDS is being deducted, and the employee fails to file the return, can he file a belated return after condonation of delay and claim the refund?
No, employee fails to file a return or employer?
Employee.
Employee fails to file, obviously belated return he can file and he can claim the refund, sir. There is no problem. But you have to be careful with the time limit, because within the end of the financial year only you have to do. Earlier you had a time of 1 year from the end of the relevant assessment year and all, but now that is not there. You have to do it on or before the end of the relevant assessment year, and you have to claim the refund. But for that, you also have to pay a late fee under section 234F also.
Yes, yes.
You have to be careful, sir. If that amount, you are doing it on or before 31st December, then you have to pay a late fee of 1,000 rupees. Otherwise, it will go on up to 10,000 if your income is exceeding 5 lakhs. So, and that amount also, one good thing what the department has done is, sir, that amount is getting deducted from the refund amount.
Right.
So we need not separately pay it from our pocket again. So that can be done. That is a good thing what the income tax department has done so far.
Right, sir. So we have a question from Ismail, who is from Chennai. He is asking to kindly explain section 17 subsection 2 clause 2.
So, okay, that is he is asking about accommodation provided at concessional rent. 17 subsection 2 clause 2, right, sir?
Yes, sir.
Yeah, it is accommodation provided at concessional rent, sir. It is nothing but when an employer provides an accommodation to the employee by charging some nominal rent, or I can say concessional rent, it will become, the difference of that will become a perquisite in the hands of the employee. Like for example, when he is providing a rent, accommodation and charging some rent, first calculate the perquisite as if the accommodation is provided to you free of cost. That is rent-free accommodation, which means you have to value the perquisite as per section 17 subsection 2 clause 1 first. Calculate as if it is rent-free. From that, subtract what is the amount recovered from the employee in the form of rent. The balance, whatever is there, only if it is positive only, will be the value of perquisite.
Yes, sir.
And one more thing, sir, this rent accommodation given to Supreme Court or High Court judges will be totally tax-free.
So there was one question, what about the IAS and the IPS officers?
As of now, there is no specific exemption provided to them. So no comments on that.
So we have a question from Kishan Agarwal, who is from Bangalore. He is asking, a person has not occupied his flat as it is yet to get completed.
Okay.
And delivered, but start paying EMI. Can he claim the interest on housing loan?
No, for that purpose, section 24B will come into picture, sir. Section 24 subsection B of the Income Tax Act says, even though that is not within the purview of our discussion today, because it is an income from a house property, but still, since he has asked a question, let us not disappoint him. Let us give the answer also. Section 24B of the Income Tax Act says, interest on loan shall be allowed as a deduction only in the year of completion of construction of the house. So whatever interest arises up to the construction is called as pre-construction interest. This pre-construction interest will be allowed as a deduction in 5 equal installments starting from the year of completion of construction. So till that point of time, he cannot claim it as a deduction at all.
So Vijay from Mumbai is asking, in case of employee contribution to EPF exceeds rupees 2,50,000.
Yes.
And from assessment year 2020 to 23, interest on such contribution is taxable.
Yes.
The question is whether such interest is taxable on accrual basis or on receipt basis.
It is taxable on accrual basis, sir.
Okay, sir.
Because salary is also taxed on due or receipt basis, which is earlier.
Right. The very first line of the salary chapter says so.
Yeah.
So there is again one question on professional experience. An employer is paying salary to his employees, okay, but the employer forgets to show the HRA component.
Okay.
The employer, what did he do? He did not bifurcate the salary into various categories of salary.
Okay. Okay. Okay.
He showed the total amount of salary as basic salary and calculated the tax and the deductions and gave it to the employee. Now employee is incurring a house rent. If he goes by the Form 16, he has to pay out from his pocket excess amount of tax. In that case, what should be done?
That's what I have told, sir, in the beginning when I was telling about HRA 1013A. Unless and until you provide the rental receipts to the employer from last assessment year onwards, yes, they are not. The income tax department is not considering the HRA exemptions at all. So you have to mandatorily provide this rental receipts to the employer. Then the employer will calculate. Now employer knows what are the components and all. He'll start calculating the exemption and he will give it to you in the form number 16. So your major problem of your question is solved. Other thing is what? ADGG. But now what is happening, sir? You have to check whether HRA is given by the employer or not. If it is not given by the employer, then actually you can claim under ADGG, strictly speaking. That is again a loophole in the law, but the indirect implication in the law is ADGG will be given only to those who are not having salary income. That is what is the strict procedure which the department is following from last assessment year only. Prior to that, even we also claimed under ADGG, sir, if you remember. But from last assessment year, the department is straight away rejecting the claims and they are adjusting the refunds also.
Okay. So we have this question from Ganesh Kumar, who is from Coimbatore. He says that employee has a house in the outer part of Coimbatore.
Okay.
And for the purpose of rendering his service to the company, he is staying in a rented accommodation within the city.
Very good.
So can he claim HRA?
Yes, he can very well claim HRA, even though he has a own house. But only thing is that own house, whatever he is having, he should give it on rent. And he has to declare that income from house property. Then only he can claim this HRA for the house where he is staying and paying the rent. So that is very much important. You should declare that house, whatever you have in some other place, as income from house property. Income you have to declare. Otherwise, you will not be eligible to claim the exemption.
So next question is from Shakshi. She is from Shikohabad. If a person is not able to claim relief under Section 89 in this financial year, can that SSC claim it in the next financial year?
It should be claimed only in the year in which the amount is received. Otherwise, the tax rates will change. No.
There is one Saurabh from Sundargarh. He is asking, can you please explain the medical facility perquisites given by the employer in their own medical place?
Yeah.
Basically, the employer
maybe it is in the hospital owned and maintained by the employer. That's what he's asking. Dear Saurav, the medical facility provided by the employer in the hospital owned or maintained by the employer, or in a government hospital, or any hospital which is approved by the Commissioner of Income Tax, it is totally tax free. If employer is providing the medical facility in any other place, like any private clinic, then that will be fully chargeable to tax. This is when medical facility is provided in India. If it is provided outside India, you will basically have three expenses. One is cost of travel, second one is cost of stay, and third one is cost of medical treatment expense. This cost of travel will be tax free only if your gross total income does not exceed 2 lakhs. Whereas cost of stay and cost of medical treatment expenses will be tax free up to the limit which is prescribed by RBI.
Yes.
And don't please get confused with medical facility and a medical allowance. Which I have already told you while I was explaining, medical allowance is a fully chargeable to tax allowance. Medical or hospital allowances and all.
Next question we have from Sneha Gupta, who is from Narkatiganj. She is asking to kindly explain deemed profits under Section 41.
Sir, that is actually relating to PGBP, sir. Section 41 deemed profits. But still, if you want, we can answer that also. That's not a problem at all.
We have few other questions. If the time permits, then we will do it.
Then we will answer this.
Yes, sir. Yes, yes. The next question is from Shubham, who is from Rourkela. He's asking, is there any impact in taxation in the hands of the employees if employer does not pay employee contribution timely? Basically, what I can assume is he's asking about the ESI and the EPF contribution.
Yeah.
Or contribution
So maybe he is going to actually, his question is relating to section 43B, unpaid liabilities and all, where employer will have to face the consequence.
Yes, sir.
The expenses will not be allowed as a deduction in the hands of the employer. And moreover, when he does not contribute any amount, but employee's own contribution only he can claim as a deduction. So employee's own contribution is by default deducted from the salary. So that will be allowed as a deduction under ATC.
Right, sir. Right, sir. So these are the questions we had. And
sir, then when the questions are over, the deemed profit 41 also will explain, okay, sir. Otherwise, that girl might get disappointed because we answered section 24B. Why not 41? Right. Actually, it is not within our purview, but for the benefit of the members, we will for the benefit of the students, we'll do it. Section 41 of the Income Tax Act talks about deemed profit, my dear. Deemed profit is nothing but whenever you sell any asset relating to the business or profession, that sale, like for example, sale of telecom license fee or the sale of spectrum license fee, section 33AB, 35 ABA and 35 ABB of the Income Tax Act very clearly gives you the sale of telecom license and the spectrum license fee. As well, you are also having section 35 AD also, where you buy a new plant and machinery, but you sell it off after claiming the deduction. Then the deduction, whatever you claimed, will be treated as your income under section 41, which is actually treated as deemed profit.
So we have received few more questions. If you agree, then I'll
please, sir. Please. We'll answer.
So Mrs. Khanna, aged about 49 years.
Okay.
Stayed in India for a total period of 729 days in the last 7 previous years.
729, sir?
Yes, sir.
Okay, sir. Right.
She has a total income from salary of 9 lakhs in India in previous year 21-22.
Okay.
She wants to know whether she can file ITR1 for previous year 21-22 or not.
Right. So whether to file ITR1 or not, it all depends on the residential status of an assessee also. An assessee who is only a resident and ordinarily resident can go for filing ITR number 1. Otherwise, they cannot file ITR1. Now, in your question, sir, the assessee, Mrs. Khanna, whoever is there, she has stayed only for 729 days. That means she does not satisfy one of the additional condition which I was discussing just now. Because one of the additional conditions says you have to stay for 730 days during the 7 preceding previous years. So what happens? See, since she is not satisfying one of the additional condition, she will not be treated as a ROR, resident and ordinary resident. Since she is not an ROR, she will not be eligible to file ITR number 1.
Great, sir. Thank you. So the next question is, Mr. AB, aged about 50 years, has income from other sources of rupees 35 lakhs.
Okay.
Income from house property situated in Lucknow of rupees 1.2 lakhs. And another income from another house property income situated in Pune of rupees 8 lakhs. Can he file ITR1?
Just now I actually covered this point, sir. When you have only one house property income only, you can file ITR number 1. If you have more than one, I was telling to someone's question actually, one house property loss you can claim here. If you have more than one house property, you have to file mandatorily ITR number 2. ITR 1 will not be applicable, even though you are a resident.
Okay, good. So Mr. P, aged about 59 years, has received salary of rupees 48 lakhs during previous year 21-22. Income of minor son is rupees 16 lakhs is also clubbed in the hands of Mr. P. And Mr. P is of the view that since he has only salary income in the previous year, can he file ITR 1?
What was the income, sir? Can you please tell me? I'll just note it down. 48 lakhs, sir.
48 lakhs is the salary income, sir.
Okay.
And minor son income is rupees 16 lakhs.
16 lakhs, sir?
Yes,
okay.
Sir.
So actually, ITR number 1 will be applicable only if your income from salary does not exceed 50 lakhs, sir. Point number 1. Okay. Not only income from salary, house property and other sources, if it does not exceed 50 lakhs only, ITR number 1 will not be applicable. Now here, by including minor's income, what is happening? 48 plus that, how much was that, sir? 48 plus 16 you were saying. 48 plus 16 comes to 64 lakhs, and he will be eligible to claim 1500 rupees as a exemption for minors income. So his salary, his amount will become 64 lakhs minus 1500. His total income will become 63 lakh 98,500, which is not less than 50 lakhs. So he will not be eligible to file ITR number 1.
Thank you, sir. The next question is Mr. Farhan, aged about 77 years.
Okay.
Has received pension of 4.9 lakhs in his savings bank account. He has also received interest from.
Sir, 9 lakhs or 4.9? How much you told?
4.9 lakhs.
4,90,000. Okay.
Okay. He has also received interest from the savings bank account of rupees 24,000 during the previous year, 21-22. Is it mandatory for him to file ITR 1?
Yeah, actually, this is a good question. Actually, this based on a release given by CBDT. Actually, they have given some relief for the senior citizens. When the senior citizen is actually having an income, he can income below the basic exemption limit. He can actually give a declaration to the banks also when you are having fixed deposit interest, because his other income other than fixed deposit interest is below the basic exemption limit of 5 lakhs, because very senior citizen. You what is the age you told?
77. 77.
Okay, 77. For them, actually, he is a normal senior citizen only. His basic exemption is 3 lakhs. But if you are calculating the income up to 5 lakhs, you know very well it goes away in the form of rebate. So with an intention of giving some flexibility to the senior citizen, the CBDT has issued one form. I don't actually remember the form. It is form 12BBA. Something is there. Yeah, 12BBA is there, the form. So that form they have to submit to the bank. Then the bankers will not deduct TDS. For those, actually, there is one section also, sir, section 194P, TDS section. 194P, which is applicable for those senior citizens above 75 years of age. Since in your case, you told 77 years. Yes, this will not be available. I mean to say, he will not be required to file ITR 1.
So we will take the last question, sir.
Okay, sir.
I'll just scroll down the one which is important. So Mr. Prakash has salary income of 18 lakhs in the previous year, 21-22.
Okay.
He has not filed his return of income for financial year 18-19, 19-20, 20-21. For last 3 previous years,
he has not filed income tax return.
Right, sir.
Okay.
In financial year 21-22, he has withdrawn rupees 28 lakhs from his bank account.
Okay.
Can he file ITR 1?
Yeah, see, once you have not filed the income tax return, section 194N will come into picture. 194N says TDS on cash withdrawals. Now, actually, 194N says if you withdraw more than 1 crore, then you will have to, file the TDS. Bankers will deduct TDS at the rate of 2% and all. But it also says if you don't file the income tax return for last 3 years also, you will not. The bankers will have to deduct the TDS. And once TDS is deducted under section 194N, then ITR 1 will not be applicable. ITR 2 only he has to file.
Thank you. So it's been a learning experience, and the way you have taken ITR 1 and the salary, I have taken many takeaways. Thank you, sir. Sir, I'll now hand over the proceedings to Alok ji. Alok ji, you can now take forward this session.
Alok ji, you're on mute.
Mute.
Thank you so much, sir, for this wonderful session. May I now request CA Raj Chawla ji, our member of Central Council and Vice Chair of Direct Tax Committee, to please give his concluding remarks. Over to you, sir.
Thank you, Alok ji. Really, I am thankful to you for selecting this wonderful faculty for our students today. And Srinath ji has explained all the contents of our salary income and ITR 1 in a very detailed way. I am thankful to you, Srinath ji. Really, you have explained all the things. And our students also have asked a variety of questions. Even many things I have learned from you, Srinath ji. And also, Alok ji has he has explained the provisions, perquisites, deductions, and this Form 16, salary, each and everything he has explained in a very well way. So really, it was a wonderful session, and I'm really thankful to the BOS for organizing such type of program for our students. And please continue to organize this type of programs. Over to you.
Thank you so much, sir, for your words of appreciation and encouragement. Very well said. We have such a wonderful expert right here with us, Srinath ji. And it's such an enriching session for all of us and certainly for our students as well. Thank you so much, sir, for taking out time on this Sunday. I would also like to thank Yogesh Pankaji, who is also our co-opted member from Student Skills Enrichment Board. And we are so much thankful for our Vice Chairman, Direct Tax Committee, who out of his love and affection for the students, agreed to address the students at such a short notice. Thank you so much, sir. Your encouragement, your words of wisdom means a lot to us. And I'm also thankful to our chairman, C.A. Sushil Goyalji, and our vice chairman, C.A. Sridhar Muplaji, who are guiding us all throughout the way for making all these PTM more captivating. And I'm thankful to the students who are the audience of the day. And instead of choosing out time hanging around in malls, they have chosen to join us in this session, that too on a holiday. Thank you so much to all the students, and I would request you all to please make this series popularize. Request all your friends to join us in our next series. So every Sunday we are conducting these sessions from 10:30 to 1 p.m. Thank you so much.
Thank you.
I would like to thank everyone. Our Chairman Goyal ji, Vice Chairman Sridhar Mupalas ji, and Vice Chairman of Direct Tax Committee Raj Chawla ji, Yogesh ji, Alok ji also for being so much supportive, and
also Vidhi Gupta ji.
Yeah, I'm just mentioning Vidhi Gupta ji, Kapil Gupta ji, and the tech support AIS also for keeping this session live. Thank you so much. It was indeed a very much pleasure to serve the Mother Institute. Thank you so much.
Thank you, everyone.
Thank you, sir. There are very few seminars, conferences where we get to learn so much, and we go with a
really
face. And today it's one of them, sir. I am all smiling and happiness. I can see it in Raj sir face and all other whomsoever I can see, sir. It's a wonderful session. Thank you, sir.
Thank you.